Hi everybody, and welcome to another overview of Bitcoin. In today's focus, we'll take a very brief look initially at the last 20-week cycle. And as you can see from the slide in front of you, it appears that the last 20-week cycle ended or found its trough on the 13th of October. That means all the current analysis is focused on price action since the 13th of October. That essentially means that the current 20-week cycle began on this particular date, and I'm just going to spend a brief moment focusing on the Hurst cycle approach today. There's a couple of other interesting topics that I'd like to spend a little bit more time on, but from a Hurst cycle perspective, it looks like the first 80-day cycle of this 20-week phase has run its course. That means that the current price action is in the early stages of the second half of this 20-week cycle phase. In other words, the 20-week cycle has moved beyond its midpoint. If we just recap on some of the price action that we've seen over the last few weeks, perhaps the most significant development has been the sell-off in Bitcoin, seeing price action move below both the 6,000 and the 5,000 level. Now, both of these were very important psychological levels, and from a sentiment perspective, this decline in price action, or the most recent decline in price action, continues to weigh on market sentiment. In other words, what that means is that the current underlying bearish pressure remains intact. From a cycle perspective, the fact that the various cycle troughs, be it the 10-day cycle, 20-day cycle, 40-day cycle, etc., all continue to find their respective troughs at lower prices, and this essentially is just another element that reinforces the underlying bearish trend in the market. What I'd like to do for the remainder of today's recording is to introduce an alternative approach that I apply to markets. And the reason I'm introducing this particular approach is because I feel that in the current climate, analyzing intraday data and using a particular methodology that I'll introduce to you very shortly is perhaps a more prudent approach under the current conditions, both from an analytical perspective as well as a trading perspective, and perhaps more pertinent to the second part, being the trading element. I'll run through some of the key elements to this particular approach before we look at some illustrations. So as I mentioned earlier, and as you can see in front of you, we'll be focusing our attention now on intraday data, and this is mainly on a 60-minute frequency. In terms of the type of price chart that we'll be looking at very shortly, it uses a point and figure methodology. Now, this is one way of recording price levels, but it is also an analytical and a trading tool in and of itself. As I mentioned earlier, we'll be applying this analysis to a 60-minute frequency. The purpose here is to identify the underlying market condition. In other words, is the market bullish or bearish? Or if it's neither of those two, then it certainly would be neutral. And this is essentially the condition that we're trying to extract from this particular approach. The technique applies the use of a moving average overview, which essentially looks to define the condition in the market. And we'll see how this is determined very shortly. Furthermore, the underlying market condition is essentially what we're looking to determine, and this dictates from a trading perspective whether one should be either long Bitcoin or long cash. It can certainly also be used as a research tool, and it is something that I use in conjunction with the cycle analysis that you've now hopefully become a little more familiar with. Take a look at the first illustration, and this simply just goes back to previous price action from earlier this year. We're looking at the period late April, May, and part of June. And the focus of attention here is not really on the point and figure chart. We don't really have time to go into the purpose of the point and figure chart in terms of the analysis, so we'll just assume that it is just a tool in terms of collecting price information. The focus of attention should really be on the moving average overview. Now here we are simply applying two moving averages. It's not necessarily just one period versus another. It's a smoothing factor where the second moving average is essentially a moving average of the first element. And the reason for doing this is to essentially try and identify the underlying slope of a moving average. In other words, if you've had a crossover from below, in other words, the red line is above the green line, then that determines whether, or identifies rather, that the market condition is bullish because the underlying slope of the moving average is positive. And when you've had a crossover from above, that then determines a negative market condition. I'll highlight a couple of illustrations in the next few slides. And the first that you can see is the first cycle phase, which is bullish in this particular chart. And remember that this is intraday data, 60-minute frequency. We then move from a bullish condition to a bearish condition when this is confirmed by the moving average analysis. And if we focus then our attention on the final portion of the chart data in front of you, that essentially has confirmed the market moving from a bearish condition into a bullish condition. Now, in each of these instances, this condition is very important because from a trading perspective, it would tell you that when the underlying market condition is bullish, those are the periods where you should be considering being long Bitcoin. When the market is in a bearish condition, your underlying trading position should be one where you are long cash. This approach is not trying to determine what price levels are achievable under each condition. It's just looking to identify whether a market condition is either bullish or bearish, and whether in turn you should be long Bitcoin or long cash. If we take this overview and look at current price action, and you can see just by focusing your attention on the left-hand portion of the chart, this illustrates the move that we saw recently below the 6,000 and the 5,000 level. And we can see how this then also resulted in a bearish crossover when looking at the moving average analysis. And this simply just confirms the fact that the market had confirmed a shift into a bearish condition. If we look at the most recent data, that bearish condition has not changed, and it basically tells us that the current underlying bearish trend remains intact. From a trading perspective, the prudent decision is one where you should be long cash rather than long Bitcoin. This is something that I will probably bring into the discussion on a more regular basis going forward. The purpose of today's discussion was to also illustrate it and its use and application, both from a research tool and a trading tool as well. So if we look to summarize, firstly, the Hurst cycle overview, the structures continue to reinforce the underlying bearish tone in the market, with cycle troughs continuing to be defined at lower price levels. The breach of both the 6,000 and the 5,000 level recently continues to weigh on sentiment. Using intraday data, namely 60-minute frequency, allows us to gain an additional insight into underlying market conditions. It also lays the foundations for a trading tool, as we saw earlier. And furthermore, what this approach tells us at this point in time is that the trend remains down at this stage, and that the prudent trading decision should be one where you should still be long cash. From a cycle perspective, finally, just to look at the relationships between the various cycles and how they are positioned in relation to each other. The 10-day cycle is currently down. The 20-day, 40-day, and 80-day cycles are up. And because the 20-day cycle has now reached its halfway or moved beyond its halfway point, its underlying direction is down. That's it for today's overview. It certainly looks like it's not going to be a turnaround for Bitcoin between now and the end of the year. Thanks once again for joining, and hope you can join me next time. Bye for now.